on, guys? Good morning. Welcome back to another live stream here with the Everyday Growth Advisors. What a morning so far. A big sell-off here after PPI data. Well, the sell-off was kind of before PPI data, but we are seeing some little bit of a continuation here. Now, that I believe that this is a nice little perfect storm for a possible volatility squeeze to the upside. And there are a couple of things that I do want to highlight. Continuing on from Monday's live stream, if you guys have attended that one, then you would kind of understand where I'm at with this. We have tactical sentiment in a squeeze signal right now, where we have visited in the past. This 3800 level or 3815 level has been a very, very significant level of demand in the past two iterations of this retest. The first time that this happened was just early on Monday, and now that we're on Wednesday, we're starting to come back down here to retest. And if we can't get below this level today, then this is going to set up a irrational squeeze to the upside, back up into the 3940 and maybe even higher after that. As I mentioned on last week's live streams, I did say that we could end up being here sideways for a little bit before we squeeze back up into the upside. Right now, a lot of this news that is pricing in, the possibility of more bearishness and all of that is mainly centering around the gamma exposure of market makers. So they have an incentive to hold this market down this week because OPEX is on Friday, and remember, we have $2.8 trillion of options that will expire on Friday. So as I mentioned on Monday's live stream, majority of that gamma and delta are all capped around this 4,000 and 4,060 to 4,100 level. Market dealers are incentivized right now and taking a loss by actually holding these prices down below. So by Friday, if we see a squeeze to the upside, it might start to look a lot like we will head towards that 40-60 level if that happens. But right now, the exposure is pretty bad. CTA side, we saw a little bit of short covering yesterday. So trend followers, as you guys know, the CTAs that I keep talking about are mainly the financial community that are basically following the trend. They actually got short squeezed yesterday, and so they did cover some shorts. And that's a lot of what we saw here in terms of that snapback price action yesterday. And today we're seeing some of that price action extend downward, probably because there was some exposure taken and dealers are rolling their positions into the end of this week ahead of OPEX. So I did mention, this market is going to be very irrational this week. We're going to see lots of ups and downs, and don't be surprised if we just keep doing this whole ding dong this whole week, okay? And that's the reason why I said OPEX weeks can really kill you if you don't know what you're doing. And if you're a beginner trader and you are trading in OPEX week, you have to be extremely careful, okay? Extremely careful. I mentioned it 3-4 times on Monday, and I'm going to mention it 3-4 times today again. This is not a week that you want to be trading and taking unnecessary risk. I've been keeping my risk pretty small this week. I haven't been trading much, but it's been a green week. So far, I've been closing out all green trades. We took NVDA puts on Monday together with Tesla puts, and then Tesla calls and Microsoft calls. And yesterday, I traded some Tesla puts and then Moderna calls, which I wish I had held for a bit longer. But hey, you know what? I took profits a bit soon, and it ended up running, higher than I expected. So I'm kind of glad that I got out of that position because pre-market this thing has been dumped. More importantly, as I had told you guys about energy on Monday, we entered a short position on XOP, which I think on Monday as well. We took some XOP 120 puts on Monday, and these should be paying out pretty nicely today, seeing that XOP is down at 119.90 pre-market here, and I've been waiting for this moment for a while on this pullback here to short energy, and that's exactly what I did as soon as we got to 126. There's no perfect timing of this market. Remember that. You can't time things perfectly. I don't care what your MACD and your RSI and your moving averages tell you, but at the end of the day, if you're a price action trader and you've been doing this for a long time, you know that there's no perfect entry and exit. You try and get in at the time that you kind of think is the right time, and then you have to suffer some drawdowns in order to see the profits. That's just the reality of the situation. If you If you think that people will trade perfectly every single time, then you're in a world of delusion, right? So this was a nice little trade. We took that trade on Monday. It's going to pay out nicely today. I think I did mention it on the live stream. So if you did follow along, then congratulations. That was a good one to take, right? I've been mentioning about energy bearish for a little while. On top of that, financials are coming almost to the point where I want to take some exposure, actually. So a little bit more downside here, maybe, on XLF before I want to take actually a big bullish shares position. So I want to take upside exposure in terms of buying shares for long term on financials, mainly because this has been a low of the year. And it's been, a pretty solid support. So I don't mind adding a little bit of XLF exposure to my portfolio, somewhere around the $30.50 mark, or maybe even the next below that would be around $28 or $29. I'm happy to take nibbles of XLF around this area. Remember that there's nothing wrong with these banks. It's just the market's full on panic right now, in terms of, oh no, everything finance is going down, and everybody just keeps selling and selling and selling for absolutely no reason, when none of these companies have had a shrinkage in their balance sheet. None of them have had a effect on their actual performance, but people are just freaking the heck out. And this is good. I personally love it. I love that people are irrational this way, because it gives me the opportunity to buy all these stocks at a lower price. And I'm okay with that. I personally love it. I mean, this huge drop here, does that reflect the bank's performance in the past quarter? Absolutely not. Are you trying to tell me that, JP Morgan's earnings compressed by whatever percentage this is? Like, what is this? Like almost, I want to say 10%? No. So it is an irrational move by the market, and I'm happy to take advantage of it. These are the moments when you kind of take advantage of the market's irrationality, and you pick up things for long term, because these are the moments when wealth is made. So if you don't have exposure in financials in your portfolio, this is a good spot to add some, right? It's not like also the discount is heavy. I mean, like, you have a decent discount. It's not like a huge discount to what you want to purchase. Anyway, I did purchase some JP Morgan and Goldman Sachs, full disclosure. A couple of days ago on Monday, I did purchase some. And so I will continually add more in tranches as they get lower and lower, if they get lower and lower, which I think that at this point the whole bank debacle is a bit overdone, because it was an isolated case. There were a couple banks involved. Okay, get over it. It's over. FDIC insured all the deposits. It's done. People are just, trying to incite fear and panic, and that's what causes the additional pressures in the other parts of the market. Market makers feed on that and then cause more downside pressure. Adding all that on an OPEX week, you can see what's going on with the market in relation to all of that. So this is a good opportunity for us to take this to our advantage, this opportunity in crisis. Remember that always. I think once we do get down into this 37.80 level, I'll be happy to grab some liquidity down here and paint to the upside. Like a market maker, I will grab upside positions if we get to 37.80 on SPX. And if we don't get to 37.80 SPX and we somehow close above 38.80 and then 39.40 in the next two consecutive sessions or something thereof, then I will take upside exposure. I won't actually get completely bullish until we get above 39.40, and I won't get completely bearish until we get below 37.80 right now. This is a chop zone, and I intend to treat it like a chop zone, so I'll be trading between the lines. I won't be trying to speculate which direction the market's going to go, because let's be real, if you're a trader, you're not a bull, you're not a bear, but you're a wolf and you're a lion. That's the reason why we have wolves and lions in our Discord. Which, by the way, is a good time for me to parlay into the fact that we have 14 days free trial on Discord. Make sure you click the link on the description if you want to trial us out and join the team. It is definitely a good opportunity if you want to learn from a bunch of people who have their heads on straight instead of screaming like chickens, up, down, every single day. We have it timed like a bunch of snipers. So I hope that you guys have a good way of measuring these markets. But other than that, EGA pre-market live streams always going to be here to help you guys out. Okay, now, unique situation here because NASDAQ is still very strong. So as I was talking earlier, this $2.8 trillion options expiry that's happening this week is actually pretty unusually skewed. The unusual skew of this, the nature of this unusual skew actually sets up a nice squeeze for technology stocks for a possibility. If the SPX continues to kind of, fall down here this AM, I'll be looking to take some bullish exposure on the market, but mainly in two sectors, technology, and I will be taking the second sector, which is actually part of technology, but semiconductors. So I want to look at both of those sectors as a potential opportunity for long exposure. NVDA has been, with the exception of NVDA, by the way, right? Because NVIDIA has been a little annoying in terms of price action. It's almost like a cockroach that doesn't die. So I kind of want to wait for this one to, either break out or reject and do something more prominent. Right now, it's kind of ranging sideways, and it's a bit impossible to trade. But if we talk about just purely semiconductors, there's a bunch of them that we might be able to see some nice bullish setups forming. One of them is TSM. Which is actually at a pivot point right here, and you could take an easy long position right now with a pretty slim risk off and a nice risk to reward ratio to the upside. So I'm going to bring this to your attention so that you guys know about this. One thing that you need to know about TSM that might be concerning is the options chain tends to be a little illiquid. So make sure that you go a little further out on the expiry, find an options chain, and remember that open interest is not the only factor that you look for in terms of liquidity. Make sure that that's enough of that volume. Make sure that the spreads are not too wide. Make sure that all of those things are true, because if you just look at open interest, that's not going to tell you anything, right? Then the other one is QCOM. This is another one that might have a nice bullish kind of a setup here. Has been making higher lows, and might be approaching this nice little pivot here for a potential move to the upside. So if it can actually break out above this 117.20 or 117.50 level, I would happily take upside here on QCOM. And I think this one also has a pretty illiquid option chain. So as I said, be careful when you're taking the options position on this. Next up is Micron. This one has been very bearish for a long time, and personally, I won't be trading this one. Risk to reward ratio is a little wonky. It's, even though we're close to the support and ultimate demand zone here, I think it needs to move a bit further down, and then when it does get there eventually, then it might be a bit tradable. AMD and NVIDIA, I'm avoiding altogether. They're not decent setups, so I'm not going to take them. Intel is the same thing. And the last one is Marvel. And I spoke about Marvel on Monday's live stream, and even last week's live stream. I've been looking for this one for an opportunity. It closed with a decent doji, but I haven't yet to see a bullish engulfing candle or a bullish reversal candle to take this one to the upside. So I'm actually waiting for a signal with this one. But as I mentioned, risk reward ratio wise, this is decent. If you went long somewhere around the $36 level or close to it, you could go risk off around 35, and this would be your risk that you're taking on. And that long exposure is easily a 1:2 risk reward ratio. So I do like to set up from the perspective of that. And then you put that along with the fact that NASDAQ's pretty strong here versus the S&P 500. Semis just look like, certain semis look like a good setup. Okay, not all of them, as I mentioned, but certain semis look like a good setup. So I'll be watching those closely. QCOM, TSM, Marvel. Not NVIDIA, not AMD. Those two are tapped out in terms of risk reward ratio. I wouldn't be wanting to look at them as setups. They're not something that I'm looking at right now. I'll be taking partial profits on XOP today, and then what I'll be doing is waiting for a pullback to roll my profits into a further expiry. Sorry, not a further expiry, but a lower strike. Or I might just hold some of the contracts, and on the pullback, I'll add some more to them. It all kind of depends on how the price action goes today. If energy squeezes back up, expect the S&P 500 to squeeze back up. That will be a case for today. So, and remember that these squeezes are happening very, very often. So don't expect the market to keep falling into oblivion here as people get more and more bearish. It's a good spot for you to take, once again, risk to reward ratio wise, upside exposure, right? We saw over the past couple of sessions, actually, a lot of a lot of capital flowing into the mega caps. One particular mega cap that capital was flowing into was Microsoft. If you can see, it's been actually breaking out and finding some bullish momentum. And then Apple as well has been finding some bullish momentum itself in the past 2 sessions or so. If it can really hold this level, then sure. But remember, Apple's going to kind of dictate the direction of the market. So I just want to point it out there that since they have been strong in the past couple of sessions, they might be weak in these 2 sessions. So we were looking for squeezes on these plays, if anything, to kind of give us the direction. On top of that, Google was another one that was pretty much eyed on the past couple of sessions as well after this kind of move down. And I've been looking for entry on these for a while now. So Meta was the other one, had some news yesterday that it was cutting jobs, and so it went on another push to the upside, etc., etc. So I think you guys can kind of see the point I'm trying to get at here. If the market gets unusually bearish and starts hitting down to 3800 level, 3780 level, I'm happy to take some upside exposure here, and the things that I will be looking at will be the semiconductors and main big tech, right? Because those will set up for squeezes, which will ultimately be nice in terms of that risk-reward ratio, sweet payout. So those are the sectors that I'll be looking at, focusing on heading into OPEX on Friday. I rather trade the mega caps anyway because they're a little more safer in terms of exposure, and it'll just be a bit easier on the risk-to-reward ratio side. Things that I don't want to trade this week are high risk items or high beta items, high beta securities. I don't want to trade those. Things like Tesla, I don't want to really trade that this week. I did trade like bullish bounds, but to be honest, if I had the opportunity this week and it doesn't give me a clear direction, I'm not going to trade it anymore because it does feel to me like it wants a range here, and so I'll avoid trading this. Even though there's a nice little inverse head and shoulder pattern forming on Tesla here, I will avoid trading this right now until I see clearer direction. And then obviously everything else that's a part of ARKK basically, I want to avoid this right now until I see some clear direction. Do you guys have any charts or any comments, questions for me today? If not, that's all I have for you guys today. I also want to be just a heads up, I'm going to be adding some Domino's Pizza shares to my portfolio. I've had shares of this business for a while. It's come down significantly to the point where I want to add a bit more. So if you're one of those people that enjoy buying bits and pieces of businesses that have really good cash flow, Domino's Pizza is actually one of them. So intrinsic valuation of this company is like way above $400, and so it's trading at a discount right now, and I'll be adding some shares of this one. Apart from that, Baba still hasn't bounced, and this is the reason why I told you guys don't catch a falling knife on Baba, right? You think this is a good spot to add, then it goes lower, and then it goes lower, and then it goes lower, right? So wait for it to reverse and then ultimately make higher highs, and then you can start adding exposure to this one to the upside. But we're getting there. We're getting there very slowly, but we're getting there. You can see, we probably come down here and bounce perfectly. You guys have seen this drawn here for like the past 3-4 weeks already. So if we do indeed bounce here, you can call me the prophecy writer for Baba from then on, okay? I will not accept any other name. Make sure that my name will now be Prophet T. Prophecy, but Prophet T. So if Baba does indeed bounce at this 77 level, I'm going to laugh. But I don't think it's going to happen. I just, just like making jokes. But apart from that, yeah, that's all I have for you guys today. I hope that you guys have a good trading session. I don't see any comments. I don't see any messages or anything else. Make sure you guys hit that like button before you leave if you can. I truly appreciate it. And then also remember, we have that webinar coming up 26th of March. Make sure you sign up for it. There's a link in our bio in Instagram. You can sign up through that, or I've also sent out the link through the newsletter. I'll continually send out that link for the next 2 weeks until the webinar. I highly recommend you guys to attend that webinar. It's going to be very insightful. And so, yeah. Alrighty. I hope you have a good one. I'm going to get onto the Discord Trade Live with the team now. So I'll see you guys on Friday for OPEX. Peace. Remember, keep your risk controlled and don't blow up your account. Peace, guys.